Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Monday, February 26, 2020. The year is 2024. That's right, February 26, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the big picture. Now we may see this area. I don't have a clear indication of it yet. I'll get to that in a moment. But the 175.08 long-term support area in reach perhaps again over the next week or two. Once again, I will show that in a moment. But if tested, I just want you to know that this is a formation that can absorb selling through March. And from here, we can turn back up, possibly through the second quarter. We would need a buy signal on the way up that I'm also presenting here in the mid to upper 190s. That is our next significant upward pivot point as we move into later Q2. So really it is a 175. We can just call it a mid 170s support and a mid 190s resistance. That is the two-sided framework that we find ourselves in through the month of March, the way I see it. If we do close back below 175.08 at the end of this week, that sets up a 3 to 5 week sell signal back to what I consider to be ultra long-term support in the low to mid 160s, 162.72 to 164.13. Once again, this is a weekly chart. This structure we settled above last May, held beautifully last fall, can still contain selling on an annual basis, and I don't see any reason to consider it in reach unless we close below 175.08. So let's get to trying to see if I've got that mapped out on the daily chart. Yeah, we've got this sort of underscores the mid 170 support. Not only do we have that former channel top that you see on the daily chart here at 174.67, 175.08 on the weekly chart, but we also have the sort of more recently formed descending channel bottom at 175.94 that is based on the December-January highs and the intermediate low from early January. So this 174.67 to 175.94 region, if tested over the next week or two, well equipped once again to contain selling through March and even through the second quarter. Now, are we going to retest it? I think that becomes likely if we were to close today back below this very short-term channel top, unable to sustain a rally following the buy signal that occurred last Thursday above it. And it wasn't a significant buy signal, and it really actually indicated 185.52. But I think the market tips its hand if we close today back below 181.48. It doesn't take a stretch of the imagination to then envision by the end of next week or sooner the market continuing south into the mid 170s. Where a buy opportunity presents. But for those of you who trade the 3 to 5 day time frame, if we close today below 181.48, it is the short side, I think, down to 178.52. Do I show that? Yes, just a simple trend line off these lows. So if we close today below 181.48, 178.52 in reach tomorrow. In fact, if the market shows weakness, say in the Sunday evening futures, and then we wind up opening Monday below 181.48, we could actually test 178.52 on Monday. And that would probably be it to the downside for the day. But once again, closing below 181.48, I think you can play the short side into later week. We could then by Friday's close unravel all the way back into the mid 170s, where once again we find meaningful support, able to absorb selling, wrong image here, able to absorb selling through March and even into later Q2. Now for the upside, Once again, so long as we hold above 181.48, this level can contain session weakness, and above which 185.52 in reach, nothing more than a descending two-thirds speed line based off the last 2 weeks' activity. It can contain session strength, and if settled above, should then yield 189.73 within several days. So this is kind of your, what I would call your 3 to 5 day swing trade. To the downside, settlement below 181.48, expecting the mid 170s. To the upside with a settlement above 185.52, this could be a 2 to 3 day rally to 189.73. And you can see it all shown here on the far right. You know, I don't like it but I can't deny what I'm seeing here on the chart. What I like to do is present 3 to 5 day, 2 to 3 week buy signal, sell signal opportunities. And they really don't avail themselves until we fall into the mid 170s. If we fall into the mid 170s, I'm talking 2 to 3 week swing trade. Or you could sell 189.73, which is a descending two-thirds speed line that is projected off that December high, that meaningful all-time high. And so it does have bearing on the market. If we were over the next couple of weeks, and once again, 189.73 is expected this week if we close today above 185.52, able to contain weekly buying pressures, possibly through next week. We could fall away from here, but if we close above 189.73, we have a 1 to 2 week buy signal into the mid to upper 190s. As I said at the beginning of this video, if you're looking through March trade, it really is buying the mid 170s and selling the mid 190s. And inside of all that, we have these sort of short-term 2 to 3 day, 3 to 5 day swing trade opportunities. And that's just the way it's sort of presenting, the way I see it anyway on the chart. Holding above 181.48, we should, over the next day or two, possibly today, test 182.52. On the way up today, I've got 183.97 that can contain intraday buying pressures. And if we push through 183.97, 185.52 in reach, where we can place a daily high, closing above 185.52. If your time horizon is 3 to 5 days, I see no good reason to be short Apple. You should be long Apple into later week, 189.73, then expected within 3 to 5 days or less, where we could top out through next week, and is an area that, if settled above, once again, would clearly indicate the mid to upper 190s. So that's kind of the way it's playing out with this congestive framework. We've got these little levels every few points, every 3 or 4 points. And then if we close below 180, 148, we've got a sell signal into later week, into the mid 170s. We close above 185.52. We have a buy signal into later week, expecting the upper 180s. It's about as simple as that. Inside of that, day traders can have at 181.48 and 185.52. Breaking or opening below 181.48, day traders go short, stay short down to 178.52. Inversely, you could bottom pick 181.48 in anticipation of 185.52, where day traders could take profits on a long position or perhaps even go short. Closing above 180.52, no good reason to be short Apple as we move into later week, then expecting 189.73. If we happen to slip into the mid 170s over the next week or so, this is a long-term buy signal opportunity. Just putting it out there once again. That should yield then within 2 to 3 weeks, 189.73. And over the next 3 to 5 weeks, 1 to 2 months, some variation of this 195.31 to 197.30 channel structures. You know, I think I pretty much said it all. Please click like, share, subscribe. Check out wickedstocks.com. We offer 2 stock picks a week. We do daily triple Q and SPY analysis. You've got 5 days to look under the hood, check everything out. And if you don't like it, you can bow out at no cost to you whatsoever. But you just might like it and stick around a while. I'm going to leave it at that for Monday's Apple Report. I'll be back, of course, tomorrow with Tuesdays. And you have a great day.